Hello, and welcome to another episode of Decentral Lounge, which is brought to you by GlobalStake, your institutional, truly decentralized bare metal staking provider. And today we're very excited to have a wonderful guest on the show, Adam Blumberg. Welcome to today's episode. So again, Adam is a distinguished figure in the world of finance and cryptocurrency. He's the co-founder of Interaxis, which is an educational platform dedicated to demystifying digital assets and decentralized finance. Additionally, as a certified financial planner and a former registered investment advisor, Adam has leveraged his extensive knowledge to enlighten advisors as well as investors about the burgeoning crypto space. His contributions have been featured on renowned platforms like Blumberg TV and Blockworks, and through the Interaxis YouTube channel. His insights continue to reach a massive global audience. Today, he joins us to share his experience and perspectives in this evolving landscape of digital finance. Adam, excited to have you on.
I'm excited to be here, Jordan. And the demystifying thing, I like that. I don't even think I came up with that, but I'm going to take it.
Yeah,
I like demystifying digital assets for advisors. That's what I'm going to go with.
I love it. I mean, it's really true because a lot of financial advisors thought that this was going to be 10 years plus away. And now with the ETF approval and everything, it's here and now. So mentioning that, let's kind of start from the very beginning. I'm curious if you could tell us about your story, about your background, and then what led you. What was that pivotal moment that said, hey, I want to enter in the cryptocurrency space and led you to today?
Okay. So I'm probably a little bit older than most people, quote, in crypto. I'm getting dangerously close to 50 now. So probably like my third career was moving back into the financial world. So I was a finance major in college, and then I went into the technology world because in 99 and 2000, that's just what you did, right? So I went to work for a startup IT company, and then I started my own IT company, and I had that for several years, sold that in 2008, which actually was more fortuitous than anything. It wasn't like I had some sort of crystal ball that knew 2008 was coming. I just was tired of having an IT company at that time. And so I sold my company, wasn't sure what I was going to do, jumped back into the financial services world, started with Mass Mutual, which is a insurance company and insurance broker dealer. I got my CFP, met my business partner, Ron Dixon, and we left and started our own RIA, our own registered investment advisor firm shortly after that. And we ran that for a while. We managed 401k plans. Most of our clients were small business owners. Most of them were actually in construction, which was an interesting niche for financial planners. And it was in maybe 2017. Yeah, it was about mid 2017. Ron kept talking to me about crypto, kept talking to me about Bitcoin. And finally I said, you know what, fine, I'll buy some. And I said, I don't even know how to do it. And he goes, go to Coinbase. And so I went to Coinbase, and lo and behold, there was more than just Bitcoin. There was Bitcoin and ETH thing and Litecoin. Those are the big three. That was all that was available at the time. And I didn't realize there was more than one. And naively, the first one I bought was ETH. And I'm not saying naive because I don't think it's a good investment. I'm saying naive because at the time, ETH was like $190 and Bitcoin was like 4,000. And my naive thinking was, well, why wouldn't I buy the one that's $190? Because clearly it's going to get to 4,000 like the other one, right? And so that was my only thinking. I knew zero about them. And it just went up. ETH just shot up after that. This is mid 2017. So you guys probably know what happened is everything just went through the roof. There was all, ICOs and everything. I still didn't know what that was. And so then I bought Litecoin, and it went up. I was like, I'm going to be retired in like a year and a half. This is awesome. This is so easy. And then Ron said, there are thousands of these. We can go to these other markets and trade them. And I was like, I don't believe you. And I went and looked at Bittrex and Binance and everything. And I said, I have to understand why there's thousands. What are they? I know I've been playing around with them and they've been going up, but that doesn't teach me anything. So I went down that proverbial rabbit hole that probably you guys went down as well, which wasn't that easy in 2017. It was like a bunch of obscure YouTube channels, actually reading white papers, listening to a bunch of people that were really, no offense to them, kind of hard to understand because English was definitely not their first language, trying to understand this. And a lot of theoretical, a lot of Austrian economics, that kind of stuff. And just wanted to learn it all. And it reminded me so much of the beginning of the internet, which if you got from how old I am now, you get that I was in college from 93 to 97 during like the early days of, early launch of Amazon, eBay, all of those things, early websites. I think I built a website in college with it. If you look back at it now, it was like a Houston Rockets like fan page that I built in college. And it was so horrible. It was like animated GIFs everywhere, like shooting off rockets. But I thought like this crypto thing reminds me of the internet, which I didn't take advantage of nearly enough, being as, how old I was at the time and the fact that I could have gone into business in the internet world. And I thought, I'm going to jump on this and I'm going to learn more about it. And I'm going to teach people about it and find some way to get involved, because at my age, there are not going to be that many more opportunities for technologies like this to come around. So we kept talking, like I kept going down that rabbit hole. I got to speak at conferences, and I got to speak at crypto conferences. They wanted someone with, I think, official sounding letters after their name. And I had a CFP, and they're like, oh, let's have this guy speak. And then we launched the YouTube channel, which also was Ron's idea. And I was completely naive to realize like how easy it was to launch a YouTube channel. I thought you had to like call YouTube or something, but I was like total Michael Scott in that regard. And we launched the YouTube channel. People seem to like how I explain things, which is just me and a whiteboard. And then we decided we need to teach financial advisors. So we sold our RIA, we launched Interaxis, and I wish I could say, and here we are, but that was like 4 years ago. That was like 3 crypto cycles ago.
That's a great intro to the story, and 100%. My first introduction was also 2017 Coinbase, same thought process, except I went down a separate rabbit hole, BitConnect, all that stuff, and it's like, what is going on? So definitely excited to have people like you in the space helping institutions, kind of shipping them in the right direction, because every single bull run has these different hype cycles going into AI, all that stuff. It's going to be more of the same. So I love the connection that you mentioned of, hey, you notice that this is similar to the internet. And there was a lot of fads per se and fake businesses that were launched to scam people. So I love that you recognize that, and you're creating this educational platform, or should I say have created, Interaxis. And if you can kind of elaborate what Interaxis is wanting to do in 2024, et cetera, to help institutions not end up like a lot of people in 2017 losing all their money investing in the wrong stuff.
Well, we realized early on that, one, a lot of people are not going to invest in crypto. And at the time we started this, right, it was like 2019. It was pretty much you invest in crypto or you don't. There wasn't a lot of thinking for a lot of people about what the underlying ecosystem was going to do. Remember, this is like pre-DeFi. I don't think DeFi was even something anyone talked about in 2019. It was like the early days of MakerDAO and DAI, and Aave, I think, was called ETHLend at the time. And there wasn't a lot of thought of that. So our thought was, okay, people aren't going to invest in crypto until they talk to their advisor, and their advisor has to know about it. And that's where you have to start thinking about safety, security. You have to think about allocation, portfolio allocation, so that people could go, okay, I'm going to put 5% into crypto. We still didn't really know how to do it. There wasn't like a very compliant way to do that. But we assumed that at some point advisors were going to want to know about it. And so we started off with a course, and I again created it like I do a lot of things. I put a camera in front of my whiteboard and started talking about why Bitcoin exists. That was the beginning, why it exists, because you can't go forward until you understand why. Like what was happening before 2008, leading up to 2008, in 2008, that caused this, that caused that lack of trust in the banking system and in the government and the regulators and such. And by the way, we have the technology to fix it. We have the technology to do something about it. And so we went with the why, how it works, because our feeling is for this, I want to say for this ecosystem, unlike anything else, especially financial advisors have to deal with, this is not something where you just go, okay, we're going to allocate a little bit and I don't really understand it. Because yes, they can allocate a little bit, but we want to explain to them how it works, because we think this is going to be the way the financial system works. It's going to run on blockchain rails, and advisors are going to have to understand what that means, because it's going to be so impactful on their business and their life. It's going to be so impactful on your life and my life and everything, where in 10 years you won't realize that everything is running on chain, but everything is going to be running on chain. We can just look at the fact that Larry Fink was talking about, I think today, as we're talking on CNBC, about the next phase is tokenizing assets that's running on chain. Anyway, sorry, that was kind of an aside. But what we're trying to do with Interaxis, it started out with we want to teach a course to advisors that starts with why Bitcoin exists and gets all the way through Ethereum and smart contracts and wallets and DeFi, real world assets, NFTs, all of those things, how to hold it, how to be compliant, how to talk to your clients about it. And then we want to stick with them, right? So I do a Friday session, every session I do every week I do a live session where we talk about what happened that week in crypto, or some news or some part of crypto. Sometimes it's, hey, Adam, let's talk about transparency this week. Let's talk about how cool that is. And me and all the financial advisors that want to join, and we just discuss it, because it's important to understand, like there's crypto news, and then there's how crypto news affects you as a financial advisor, how it affects your clients, how it affects portfolios, how it affects how you run your business. And it's important for me to think through those things and help advisors think through, because as I said, it's going to be an important part of how they do business. It's going to be an important part of their of the financial system, and therefore their industry.
I have a follow-up question. I was an educator for 20 years, basically, before I came full-time to Web3. And it seems like this is what you're doing, is really just educating people. Was there a specific pain point that you find, like, it sounds like you did a great job in terms of scaffolding up the learning for these financial analysts. Was there a specific pain point, or maybe even 2 or 3, that you find that they struggle with the most in any point when they're trying to learn how all this technology works?
Well, there are several pain points. One is, hey, people in the government, people at big banks like JP Morgan say that it doesn't have any value. There's no intrinsic value. That's a big pain point, right? It's people that we've trusted in the past to kind of define what money is and define what assets are and define what value is, are saying this doesn't have value. That's a big pain point. Another large pain point is for themselves deciding, why does this have value? Right. So if we talk about something like Ethereum, and we don't need to get into all the details, we talk about something like ETH, the value of the token is somewhat based on the demand for block space in the future. How much do I think people are going to be willing to spend to inscribe their transaction on a decentralized, immutable chain? And that's what drives the demand for ETH. And what drives the supply of ETH is somewhat the demand, right? The more transactions, the more it's going to get issued, the more it's going to get burned, all those things. But at no point, if you own ETH, do you own a piece of the network. So how do we value that? We've never had an asset like that before. So I think those are some hard points to get over, Ryan, is how this doesn't fit neatly into anything we've had in the past. And beyond that, it's the idea that, look, Bitcoin and ETH, Bitcoin and Solana, ETH and Solana are very different, right? Bitcoin and ETH are so different in terms of their valuation structures. It just so happens that they both are the native cryptocurrencies of different blockchains. But other than that, there's almost nothing they have in common. So the idea from most advisors is one is going to win. I'm going with the Bitcoin maxis or the ETH maxis or something, but there's no idea of, look, they're both going to be important. They're both going to keep moving. And here's why Bitcoin is important. And here's why ETH is important. And here's why it's also important to understand the infrastructure, even if you don't care to invest in Bitcoin or ETH. Even if you go, look, I think the infrastructure is important. I think wallets and custody are going to be important. I think transparency is important. And maybe my clients are just transacting using USDC or, a stable coin. But as an advisor, I better understand that, because I'm going to have to help them keep their wealth safe. And some of their wealth is going to be coming in USDC or going out in USDC, or they can spend it, they can borrow, they can lend, they can earn interest on it, all those things. Those are really hard concepts to get across, because, Ryan, we're so used to, and financial advisors honestly are so spoon-fed the current financial systems of custody and of trust and who holds the money and who lets you move the money and market hours, that the system, the crypto blockchain system, is really hard to get across. It's hard to understand that you can have a public blockchain that's completely transparent and still have privacy at the same time. That's really hard to wrap your head around. So getting all of that across and going, no, I can, if I have, $20 million worth of crypto assets, I can go borrow 15 like that in a second by connecting my wallet, and bam, it's there. And by the way, I can return it the next second if I want to. Like that's crazy talk for most people, but getting that across to advisors and then going, all right, now you have all that. Now that I've shot the fire hose at you, now figure out how to put it in client accounts. And now understand why it's important for you to continue to learn, why you might want to put, why your clients in the future are actually going to custody their own assets. Lo and behold, like, you're not going to be in charge of custody anymore. They're going to be in charge of their own stuff. How does that change your business? Right. And it's really hard to get out of this thinking we've had for the last, 50, 100 years.
I'm curious, and follow up from that, from an advisor's point of view, from what you're seeing in the market, generationally or even age bracket, whatever you prefer to kind of answer here, who are the ones that are actively asking about cryptocurrency? Because other RIAs that we've talked to, they're saying first generation, even second generation, or people that are Gen X and older really want nothing to do with crypto. They hear about it on the news. They're just saying, I'm okay with my blue chip stocks. And it's the younger generation. But is that even really accurate? Is that true?
That's actually pretty accurate. That's everything that I've seen. And again, I'm not an advisor anymore, so I don't have clients that are in this. But one, most of the advisors that go through our programs and that we see each week are, they skew younger anyway. Because, and then they have clients who are younger because these are more digitally native people, right? I'm one of the, last generations that remembers what it was like to have that cell phone literally mounted into my car with the antenna on the back window that would flop around, and it was like 30 cents a minute every time you made a call. So I'd be, you pick up the phone, you're like, hi, I'm here, bye, click. And hoping you can get in before that 10 seconds run off. I remember that, but the younger people, they're just digitally native. They grew up with iPhones. And so digital money totally makes sense. They're used to just sending money to each other anywhere on the phone. So this makes sense. And then keep in mind that you mentioned it, the older generation, they're fine with their stocks and their equities and such. But remember, that generation came into their peak earning years 15 years ago. Right now, for 15 years, the market did nothing but go up. You had low interest rates. You had crazy growth in equities. So why would they want anything different? They went from being, middle management or something to being the partner at the law firm, the partner at the CPA firm, owning the company, whatever, and making a lot of money at the same time that equities were crazy going up. For their advisor, it was easy, right? It was really hard to mess up someone's portfolio for the last 15 years. You literally just stuck it in Apple and Amazon and Google and call it a day. And even if you, quote, diversified into separate ETFs, they all owned Google and Amazon and Apple, right? So they all did the exact same thing, but it didn't matter. No one cared about diversification because everything was going up. So yeah, those people that are of that age, why would they go to anything else? Why would they go, oh yeah, I'm totally going to risk it on this other asset class? Which is the ironic thing is, those people are the same age that, probably 20 years ago, they wanted to invest in internet stocks because they were the young ones, right? And they're going, no, this internet thing is going to be a big deal, and trying to tell their parents. And their parents are like, no, I go to the store to buy books. I read the newspaper, physically. And now those are the same people going, no, I don't believe in this crypto thing because Jamie Dimon and Gary Gensler and Liz Warren said no. And so, yeah, it does tend to skew younger, and it's a way for the younger generation to invest in something that, one, their parents don't invest in, and where they can go, look, I see the value and my parents don't. And it's really hard to talk to you and say those demographics that you think of are accurate, but they're kind of accurate.
So then to continue that train of thought, I'm curious, there's been a lot of articles on Forbes, Wall Street Journal, et cetera, that are essentially stating many of the younger generation are wanting to throw more allocations towards cryptocurrency because they believe, hey, this is the future. It's probably going to outweigh equities, et cetera. So from a CFP perspective, younger people traditionally are able to put stuff into higher growth stocks. They can be a little bit more aggressive with their investing strategy. Again, this is not financial advice for anybody that's listening. But Adam, I'm kind of curious your perspective. What do you think would be a theoretical appropriate amount of one's portfolio they should be putting in cryptocurrency?
For most people, we talk about anywhere from 1% to 5%, and that kind of depends on their risk profile. It depends on what their income is like. It depends on what their other savings is like. You don't like allocate your last dime to this, hoping that it's going to run up and you're going to be able to pay all your bills with it. And the problem too with crypto is you've seen people that have gone from 0 to 6, 7, 8, 9 figures in a matter of weeks, and you go, well, I want to do that. And you start throwing your money at bad stuff. You start throwing your money at things, hoping they go up. And you guys probably know this. When things shoot up like that, they're hard to sell. It's hard to sell a winner. You go, oh, it's going to keep going and keep going and keep going. And then it goes back down and you end up with 0. And then you get frustrated and you try to do it again and again and again. And it keeps not working. So I think the tough part for younger people that are looking to allocate is don't think you're going to take your last $100 and convert it into $1 million tomorrow. There have been a few people that have done that. Believe it or not, most of them have worked really hard and for a really long time and toiled away for years before they got to that, that overnight success. It was far from an overnight success for most of them. And those that have become extremely wealthy in crypto, they had to take on a lot of risk. They've been doing this a long time. They have a tremendous amount of conviction in it. They didn't do it for the quick win. So if you're going to invest a little bit, but you have a job and you have retirement plan savings and maybe you have a house and kids and all that, this isn't going to get you to 8, 9 figure status because you picked the right meme coin. If you really want to talk about this in terms of investing and not gambling or speculating, then you learn about the asset class, you learn what you like, you have an investment thesis, you invest an appropriate amount, which might be 1% to 5%. You have a plan, an exit plan, you see what happens. If I invest 5% and it doubles in price, am I going to rebalance? Am I going to get out of it, half of it, and use that as kind of house money and put that in something else? Or is my investment thesis, I'm going to let my Bitcoin investment ride for 10 years, no matter what, until someone decides that my investment thesis is wrong? Those are the kind of tough parts to get across to kind of that age of investor is, yes, you've seen people on Twitter and Instagram and everybody that have made a whole lot of money in crypto. You don't see the ones that lost everything over and over and over again because you know what? They don't post videos of it. So know that it's still an investment and you still have to be careful with what you're doing. You still have to be careful with your money. You still have to allocate an appropriate amount. You have to have a plan, all of those things.
Great response. Great answer. Last kind of question I have for you before we wrap things up would be, what trends do you think are relevant that financial advisors should be aware of? And the way I'm phrasing this is like DeFi, they should obviously know about, but there are certain trends that'll sneak in there that can distract people, AI per se. I still think AI is relevant, but to my point, what are the ones that they should say, okay, this is something we should pay attention so we can properly educate our end client?
Look, I think right now, obviously Bitcoin's a big one because of the ETF that we talked about. ETH is a big one, again, because of ETFs and more institutional money coming in. I think the idea of, you can call them real world assets, tokenized securities, whatever you want to call them, that I think I alluded to, Larry Fink was talking about on CNBC. That's the next phase. I think that's a trend. I don't even think it's a trend. I think it's happening. And basically what that means is I take a real estate fund, a private equity fund, a private fund, some sort of asset. It could be a bond issuance, whatever it is. And I create a token of it and put it on chain. And that doesn't convert it into a volatile asset like a cryptocurrency. It just means I have a much easier, bigger, more transparent database that's keeping track of what I own. And the reason why it's important is because those are assets that are not volatile crypto assets that you don't understand. They're real estate investments. You and your clients totally understand those. But the fact that they're going to be on chain is going to increase transparency. It's going to increase liquidity. It's going to make it to where your clients are going to be able to custody them themselves in their digital wallets. That's going to change your business, because when you don't have custody of your client's assets, or you don't choose the custodian for your client's assets, and they can move anytime they want, and when those assets have a tremendous amount of transparency that informs the value of them, that changes the way you do business. When they can settle instantly, when there's more liquidity for something that used to be a very illiquid asset, that changes how you allocate the portfolio. So I think that's a trend to look at. And again, it's not necessarily because it creates volatile crypto assets. It's because the likes of BlackRock are talking about it. And BlackRock is the largest asset manager in the world, not just BlackRock. JP Morgan, of all companies, is talking about it. They're doing it with, Deutsche Bank and Citi. Coinbase launched their platform that allows for tokenization of assets. That's going to be a big one, because that's what's going to bring trillions of dollars on chain. And that drives what we talked about really early, which is something like the value of ETH, because if there's more transactions on chain, there's more demand to memorialize my transaction on that chain. And that informs the price of ETH, right? So understanding that we are eventually going to put all assets likely on some sort of public blockchain makes you think twice about how your business runs.
Very enlightening. Adam, thank you so much for your time today. For those that are listening in the institutional space, RIA space, et cetera, what's the best way for them to interact with you, Interaxis, et cetera?
Sure. Well, I'm on Twitter at Interaxis8, the number 8, Interaxis 8. I'm also on LinkedIn, Adam Blumberg. I'm the guy that looks like me, very much like me on LinkedIn. So those are probably the easiest places to find us. We have a newsletter. We have a YouTube channel that's also Interaxis, where you can find us there. Again, the newsletter comes out several times a week, where we talk about what's happening in crypto, but more important, how it affects you as a financial professional. All different ways to find us. We're trying to get in front of you any way we can to explain to you this is coming, whether you like it or not.
Awesome. Thank you, Adam, so much for your time today. And for those of you that are listening, keep an eye out for the next episode of Decentral Lounge. Thanks, Adam.
Thanks for having me.
Thanks, Adam. Take care.